Hello everyone and welcome back to another market update video. In today's video we'll discuss the following: consolidation on low 80Ks, midweek BTC pump from macro news, focus on long trades in the coming days, short close pre-FOMC, each showing lower time frame strength. We had one of the longest ranges in a bull market in summer 2024. It lasted for about 8 months, which is pretty rare for Bitcoin, without previously having a large drawdown. The usual pattern is deep decline from all-time highs or local highs before a long consolidation range. The post-halving dump led us to have the largest drawdown of 33% of this cycle since the 2023 yearly open, which can be subjective beginning of the current bull market. We look at the current price action. We can see we've had the second largest decline right now, with 30% off all-time highs. Most of both declines have been macro correlated, as late Q1 and Q3 is a period where Bitcoin historically has high correlation with equities. Last year it was the uncertainty in markets caused by the yen carry trade, and currently it is related to tariff or the trade war uncertainty around speculation regarding FOMC and the Fed stance. With the SPX next to the BTC chart, we can see that last time we had about a 10% decline, which is pretty standard for the SPX, an index that historically trends up. This time around we've had a similar drop. What's interesting is that in both moves crypto actually ran the drop. That's typical with the added leverage in crypto perps. We often see those sharp capitulation wicks right at the bottoms. Now, if the SPX can stabilize here and the upcoming FOMC marks even a short-term recovery, this could open up a solid 2 to 3 week window to start accumulating spot positions again, just like we've seen in past cycles. But the key here, as usual, is patience. Even if you're swinging or buying spot, you want to buy the dips, not necessarily chasing strength after green days. Timing those smaller pullbacks is what gives you the best entries. So let's dive into the current price action and map out the levels and trades I'm watching next. Since 2023, we've never had a situation where Bitcoin breaks up from a large daily range and then fully breaks back down into it. The typical structure is we range, break up, form a new range, and never revisit that old one. In November, fueled by favourable macro conditions and Trump's pro-crypto stance, the market priced in a pro-crypto US government. That sparked this vicious move up, clean breakout from the summer range, straight past 100k. The important part is that breakout was driven by spot. Because we were in all-time high territory, it left volume gaps since there were no real asks or resistance above, which we can see them gaps here. But now, for the first time, we've broken down properly from a daily range and we are starting to fill in these efficiencies. My initial bull case was that if we could reclaim the range, we'd be good, but we tried and rejected off it. You can see here, making a clear failed reclaim. If we compare that to August 5th, where we also broke down but quickly reclaimed those lows and even retested them for support. This time, that reclaim didn't happen, and that's a major structural change. Since we couldn't reclaim the range, here's how I'm thinking about downside if we get more trade war FUD or a deeper SPX pullback. The key confluence zone for me is the previous range high plus the weekly demand zone, which you can see here. This area for me is super clean. We originally moved up from here on Trump's election news, so revisiting it makes a lot of sense, especially given that the current US government has offered minimal regulatory tailwinds apart from stablecoin talk. So if we sweep this area, which is 69k to 74k, I'll be buying spot aggressively here. Now, if risk assets stabilize and we get that drift up, my upside targets remain at the previous range lows plus the value area low of our last range. I grabbed some lower time frame scalp longs around 85k, which I posted on Twitter. My first target is 89k, and if momentum holds, 91k, which is our previous range low. But if we start losing our current daily lows, I'll be cutting that trade at break even because there's no need to fight the trend on this one. And if we go to Coinalyze, we can see that the lower time frame setup has been super clean. Bears tried to break us lower. We had a decent batch of long liquidations right below the weekly open, and then spot buyers stepped in and drove price back up. That move confirms the lower time frame trend is up for now. As long as we hold this area, I'll keep looking for long setups. Also, key point, shorts started covering before FOMC. March 18th, we saw open interest levels drop sharply as shorts closed positions heading into the uncertainty of FOMC on March 19th. That shift reduced selling pressure, which is why we got that grind higher instead of another breakdown. Lastly, we finally printed a daily close above two key levels, the monthly open and the 200 daily EMA. You can see this daily close was here yesterday. Initially, we dumped off the monthly open into key higher time frame resistance, dumped back under and formed new local lows, but this reclaim, it opens up the chance of a retest of March highs or at least the March close as a POI. Now, historically, holding above the 200 daily EMA with spot volume flowing in is a strong bullish signal. It allows us to entertain higher bullish targets. But, and this is important, we can't get too excited yet. We are currently sandwiched between two large daily ranges in a low volatility environment, and in these conditions, prices can shop around the 200 EMA for weeks. So patience, let's see if we hold this reclaim with spot backing it. And to finish, a lot of people have been asking for an ETH update, especially after it outperformed BTC off the lows recently. So here's my view. This outperformance isn't something I'm reading too much into. The ETH BTC has been in a clear downtrend since 2021 bull cycle topped. The pair is down roughly 75% since then, and honestly continues to print new multi-year lows almost every month. Look at the ETH USDT weekly chart. We can see that the current short-term pump seems more about de-risking, shorts covering, delta neutral strategies unwinding, and because ETH is a smaller asset, it gets exaggerated moves when that happens. But structurally, nothing changes until ETH reclaims 2120, and that's important. That level is not just random, it's the April 2023 high, the first major bull rally top of this cycle. Meanwhile, Bitcoin just broke down from a 90-day range. ETH is breaking down from a 470-day range low, which is far worse structurally. So unless you're scalping 5-minute charts, there's zero reason to get bullish on ETH until we see a clean reclaim of that 2120 level. Until then, I'm not touching long-term ETH positions. And with that wraps up the update. So quick summary, BTC's structure has shifted, ETH's bounce is just short covering, and the macro is still driving the bigger picture. The next couple of weeks are going to be all about patience, waiting for those key levels to hit and executing with discipline. So if you found this breakdown useful, drop a like, share it around, and make sure you're subscribed for the next update. I'll keep daily updates posted on my Twitter, so follow me there and trade safe. See you in the next one.